Yo, guys, how we doing? And boom, here we go. We're live. How's it going? Once again, this chat box on my thing doesn't seem to be working. I put a test in on it today. But oh well. Let me know you're here. Let me know you can hear me and everything's going all gravy. And then we can start. I don't know how I'm going to check. Hold on a second. Should have done this before, my bad. I'm a little bit out of it tonight, to be honest. There we go. Okay. Yeah. If someone could let me know, I can see the chat now. Right. So on the agenda tonight, we're gonna look at Bitcoin, Ethereum, and Solana. From next week, I'm gonna add Hyperliquid, and then when Solana hits its lows, I'm gonna drop Solana for the next cycle. It's been very nice to trade, but well, maybe I'll keep it. I don't know. Maybe I'll just keep all four. It's very nice to trade, but I just wouldn't buy it. But I'd buy Hyperliquid. And I don't think I'd buy Ethereum. But anyway, we're going to look at them. And then I am going to look at how to kind of tell when a trend is exhausted. And wanted to touch up on something that XO had talked about recently about taking a few scratches before you get your big entry. And I did that publicly. He also did that publicly. And how it gives you a little bit more of a feel for the market so that when things show up correctly, you can go bigger, as I did. And I talked about this publicly as well. Then I want to talk about just the state of crypto Twitter these days, or crypto X, whatever you want to call it. Having been around since 2018 and obviously having 4 years off, just the way things are different. I saw a video went around that Gainsey had put up, and it was pretty hard hitting truths in there about the state of crypto Twitter, and how it used to be way better, and it did. So I just want to talk about some stuff there. Not all negative, by the way, because it's still a good place. And then lastly, I wanted to just talk about a new watch list that I'm looking to create. Going from day trading to swing trading, and realizing that higher time frames like the daily and H4 are a little bit too slow for me. I'm now going to be looking at adding a new watch list with like 6 or 7 different charts on it, and then having it kind of around like 15-minute, maybe 5-minute time frame. Not the 1-minute time frame, which was what I call day trading. It's still day trading on the M15 and M5 time frame, but I just need to build a list of them so that I can have plenty of opportunities each week. So let's get into it. And I don't think I'm going to have to spend too much time talking about this, because instead of just chop, we're actually getting a nice trend down. And if we're not getting chop, we're not having to hypothesize a million different things, and we just kind of have some very key levels to focus on and trade them. Because when Bitcoin trends, either to the upside or downside, these levels react pretty consistently and quite textbook. So here on the daily time frame, I've marked this top, and this is now coming back down to essentially where I've been saying, at the bottom of this channel, the bottom of this compression. And once it had broke through the top here, because remember you got that impulse away there. Once it broke through the top, it was always going to be heading down towards the bottom of the channel. And Ahmed, if you're able to grab that from a previous stream, that'd be amazing. Thanks, man. Of me talking about that, because I can't remember if you've got any notes on it or anything. That channel is great. So now I've also said that we've got this little low here, and even though this is the bottom of the channel, this is a reaction to this point, and really you'd be looking at that more as the channel. So I still believe it's going to come down there. And then you've got the big range there like so, which we were in for months. So it's now at the range high. If it flips, let me just take some drawing off. If it flips below this point, and not only have you got the demand zone, which led to this high, which is a really key level, either this point or this point. We'll look on the lower time frames in a minute. But it's also the previous range high. So if it breaks this level, which we know is an area with a lot of liquidity because it fueled this move up. So if it breaks that, not only is it breaking it, it's also breaking this previous range high. And using the exact same concept that I've just talked about with the compression, if it breaks through one side of the channel, it's going to move to the other side of the channel. And a range is essentially a channel, right? It's just going sideways rather than compressing up. So if it breaks this side, I have every reason to believe it's going to come down to 62K, which is the other side of this range. So if we now look down to H4, you can see it's kind of close nicely. There's a tiny little gap between these two levels, so it's hard to tell really, but around here it should, I mean, I still think it's gonna break and head lower, but I reckon we get some turbulence around here or this point, or both, just because they are quite key. Like this is the end of that channel. This is the impulse that led to that channel. So we know there's a lot of buying interest at this point. There's a lot of liquidity resting here. So it would be really interesting to see what happens when it breaks, because this is quite a hollow move up down to this point here at 68K. So I think if it goes below this 70.5K level, I think it should move down there pretty quickly, down to about 68K. So now if we just jump down to H2, 2-hourly time frame, we had, in a similar fashion to what I've just said on the higher time frames, we have an impulse away. We have a little level that continues to move and then holds the market up from there, and then that gets broken, and then sitting on the break of it, you've got another range, or if you like, a supply zone, like that. So when the range is forming, it's nice to mark them in this way, because you can see it acts very organically, and you can get a pretty good read if you just wait for the right moments. You'd wait for the right moment because you'd be in the down. You'd look at the fact that we're in a downtrend. I know we're at support, but you'd favor the downtrend because we're higher time frame downtrend as well. So when it starts breaking to the upside, you're not looking long, but when you see the longs have given up and it starts breaking through the downside with strength, that's when you know you can follow the breakout. But in the same way that this area had fueled a big move to the upside, so we know there's resting liquidity there, so we can expect, like what we've seen here, a bounce. It depends on the strength of this move. If the strength of the move is stronger than this demand, it breaks. But if it retests this point up here, we know there's a lot of selling interest and resting liquidity, so we know we can look for a short back down, and maybe it takes a couple of attempts to drive through this demand. So that's a nice area to mark. The absolute extreme of this area is where the main sell-off came from. So I'm using the high here of the actual range itself before the new low was made. And then I'm using the open of this big momentum candle. And that's kind of roundabouts where now if we get a retrace, I'd start looking for exhaustion, and then I'd start looking for a reversal to head back down. So that's a really clean level. And then above that, we have the same thing here. So you see it pushes down quite strong a couple of times, but then sort of exhausts, taps into the level. And then in the same way I just said, you're looking for that range to break to the downside. You see the same thing here when it creates the low, tests it, and then fakes into the supply and then with strength breaks through the low. So that was a short trigger there. But we know here there's rest in liquidity. We also know here, because this is where it breaks the low, tries to push up with one candle and then continues the move. So we have a continuation level there. In a strong trend to the downside, I would expect that level and that level to hold, but especially this level all the way up here. But I don't really think we've got much business heading all the way back up there. Although it can do, but this is where the market structure changes bullish from where we are now. A break below this point here, I think, signals a big change structurally, and we'll see price breakthrough down to 62k. Yeah, the bottom of this range. I think it should go quite quickly then. To get in, so just my plans, you would either wait for a retrace up to this point or this point, because I don't believe it should be heading back up there. Or it will build a range similar to what it's done here. It will build some sort of range, break to the downside, and then you can look to play the range itself and follow a breakout, or just hit it blindly and then expect lower lows. So that's the other thing to look out for as we develop here. I'm on H4. It might happen on the hourly time frame. It might come down here, and that's where you get your move. But it pays to look out for continuations at this point. So yeah, that's Bitcoin. That is Bitcoin. So Ethereum on H4, very similar like outlook we're going to have. So again, using, I don't know why I keep having that marked. Not this top one. We hit this supply zone. I mean, the whole zone really, you'd look at it as something like that or more like this, which is crazy, but something like that, the top of, the open before that retrace. And you can see like where that closed and where that opened to push up. You can see it taps it once. So it should be going down at that point if it's bearish, but it doesn't, and it makes the buying up here to come put in higher highs, but essentially just going straight into the extreme of the resistance and just using the wick high and then the candle open. You can see it goes right into that zone up here and then forms a top and comes right back down to the important level. So this is the first important level because that's where the buying took place to put this entire swing in. And then the next one above that was this one where you'd really expect price to be held down, because that's where we get the impulse away. And then we have the end of this sort of compressed chain, and it doesn't, so it breaks it and then pushes up to create a higher high. So we know that there's resting liquidity here and here, also here, but this is kind of a reaction to this point, which is all just sort of part of this level. So it gets broken, both of them, and the next one is down here, which is similar to previous examples where this is when the buying takes place to fuel this move to create a higher high, and then on the bounce we get a higher high and break in several resistance levels on the way. So we know this area, this low, is strong. It was strong enough to do that, but now is this move going to be strong enough to break it? And I think it will be. I think this looks like a more organic move than what we saw basically over March and April on Ethereum. So I expect it to continue this previous trend and at least hit these lows at 1750. In order to get involved, so if you've got those two key levels, which I talked about, On a break of that first one, you have this range. And this is the exact same thing I do when I look for the top pattern. This just took ages to do it, but I eventually got my sells in at 23.30, as I talked about on X, and been riding this down. And I'm just looking for the exact same thing to happen where price ranges. So we get the trend up, it ranges, drops, 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 drops. And then I'm just looking now, it ranges, it drops, 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 and then drops and goes. Just looking for the same thing over and over again, really. So I know, whoops, I don't want to get rid of that. I know that at this area, on a retest of it, if it comes to it, resting liquidity is still there, and to look for a breakdown still. Above that, we have this supply zone, which is untested. And this is where the decision to change the intra-week market structure kicked in, because this level was where it was starting to challenge the new highs. This is where that buying was fueled from. So if it's going to be bullish, this needed to push up. This needed to be a fake out and for it to climb, but it hasn't. It's just kept making lower lows. So we've got several levels for price to hold us down. And then if I just get rid of this low here, but you have to bear it in mind, of course, we have another kind of range that has formed on the break of the next key level. And you can see how it's spending its time sort of at the highs over the weekend. And then today is just ripped down to the lows. And now if it starts breaking the lows, you know that on a retest of it, similar to here, you can look for a continuation to the downside. So you just got to be patient enough for the price action to tell you what it wants to do, and then get the right entry rather than trying to chase every single breakout. There's a nuance to it. So there's your signal, and then there's your first breakout, and then there's your second breakout. But this breakout tried to take the highs and then close strong as a lower low. So there's your kind of signs that you look out for, basically. But yeah, I expect this to drop either in some fashion like that, where it goes sideways now here, or maybe it builds for the rest of the week. I'd like to see it move quicker than that. I'd like to see it just impulse down now into the range lows. I thought it was probably going to go quite hard, considering the fact that we put a massive top in. But I think it should spike down at some point into the lows, or close to the lows at the very least. If this is a market bottom, it doesn't necessarily have to come and take the lows out, but somewhere around there, you know, it could then push back up to the top of the range from there. I'm banking on it dropping through it and heading lower, but I'm also being wary and starting to like change my aggressiveness with trading my stops. So good area to look at down there. And that's how you kind of would look to get into that. Or if it does come back up here, and then look to catch a retrace. It could go look like it's going to go like absolutely nuke. And then if it does look like it's going to absolutely nuke, you just want to give it like max 3 or 4 candles to drop, maybe 3. Because if it looks like that and then starts putting in 5 candles, suddenly you get this. So you really do need to wait for the right signs, basically. But I think the market should just be going, like you can see here immediately on Solana, this is H2, we have a channel, and you would expect an impulse out of that channel, whether it follows through or not, or it just breaks it and then comes back up and claims it. I do expect everything to kind of drop and go for these range lows on the higher time frame. And similarly to what I've just been saying, you've got your key level here. This is where the buying took place to come and put these this high in. It should be bouncing at this point. It should be pushing up if it's bullish, but it's not. And it breaks through, puts the range in, or the supply zone. Once it breaks out, we know that. And on a retest of it, breaks down, and then eventually goes. So I'm looking for the same thing here, or I'm looking for the same thing here at these two supply zones. You can see we have a bit of a compression at this point, and then it impulses just on a smaller scale compared to this one. So on a daily time frame, we're coming back into the range lows down here. So expect it's going to come and hit it if it's definitely bearish. But it's also entering territory where, yeah, we might be able to see a reversal still, which is why I just kind of want to see everything drop very quickly. So I want to see now, if I'm looking to get involved, maybe on the hourly time frame, is price to kind of just come back up into this range ideally, and then drop and create new lows. And then I would expect continuation, but would have to be wary of the fact that it could just be a massive deviation of the lows. But I think this is where, having faked out the other side of the range, we have to look out for a fake out on this side. But in a downtrend, after faking the high of a range, after a pretty strong retrace, and then collapsing through the other side, it should be going. It should be going. So I'm very expectant of it, but also wary of the fact that, yeah, it's coming back down into the lows. So that's kind of a simple view on Solana, really. It's just mark this range out and see if the highs hold. Solana does like to come back and test these highs. It could wick straight into supply, and then you get a collapse. So that's something to look out for. But we are entering the lows. Could be we get a spike, like I said, and then do that, because we have to be wary of that fact. So if you didn't get up in from higher, then looking for a breakout down here is a little bit riskier, because you're now banking that lows of 4 months are going to break. Maybe they do break, but maybe they don't break first time. It might do something like that. So it's a bit riskier in that regard. But if you're looking at all the other information, then it should take the other side and then just go to the next area of liquidity, because you would say this low has now been tapped multiple times, and we haven't seen a lower low. Whereas after multiple taps of this, we saw higher highs. So the next higher low, the next lower low below this point, I would say, should see us drop in the seek of deeper liquidity. So yeah, that's that. Just gonna have a drink of water, and then we'll move on to the next section. If anyone got any questions, I don't know if this chat's working or not. It doesn't look like it. Don't know what's going on with it. You can see a lot of people are here, but yeah, it is what it is. Let's just try. Never mind. Okay. Sunny orbit. Hello. Someone says works. Great. Finally. But I think the thing I'm referring to is the live chat on the screen. I've got something set up where it's not working to bring it across and display it for some reason. Yeah, so it's not working. Right. The next section of this stream is about looking for signs of the exhaustion, how to know when a move has exhausted. And I'm going to use the example from, an actual example that is recent and fresh in the mind, but also a very good point of what I wanted to talk about. Because like I said, XO had kind of touched on this by saying multiple tests and multiple little entries into the market, just to kind of get a feel for how things go. So we can keep the price action really local. We have this big low, this big range, and this is kind of what I was just talking about on Solana, right? We have the big lows here. I just kind of want to see it rip and then create lower lows and keep ripping. But here we have that range low that gets broken. Oops. And then we have the supply above it, which is the key one, because that's where the level broke. This is where the decision was made to break the level, if you like. This is where the sell-off kicked in to not bounce from the lows, but break through them. So we know there's a lot of liquidity there. And then when we're ranging like so, and the movers run out of steam, but I'm still expecting price to come down, right? I'm still expecting this trend to continue at some point. So price goes sideways, and then when it starts coming into this low or this high, I'm looking for sells. I'm looking for points to sell. You've got this compression here, and that's the low of it, and then this is the high. And it's also a key level because, like I said, this is where the sell-off continued after breaking this low. So once we've got this point, once we're at these highs and you get that move above it, it's tapped into this low and then it breaks below it. It looks like a deviation, right? So I'm selling it and I just want it to go because I'm expecting this low to drop at some point. But it didn't this time. And I'd protected myself on this trade and taken a smaller loss because I trailed. And this kind of goes back to that point I was saying, like if it looks like it's going to go, it really just needs to go. Otherwise, you're in danger of all of this. So again, when price took this high, I went short again, expecting another deviation. Puts this in below to flip the range high. Puts in this range, which I actually shorted as well, and then drops. But then it should be at this point going. All right. So I've had a few hits because I was able to trail my stop because you've got a very good point here where once it goes, it needs to go, but it can look to refuel and then it should be going. That should continue, but it didn't, and it started retracing. So I was able to get out and again with another small loss. But these are all adding reference points up in your mind because you're getting a feel for the market. You're getting the market tell you, actually, all these times when you're watching it and you're hoping for lower and you're expecting lower and it doesn't, that's information that the tides are shifting a little bit and you maybe need to look a little bit deeper. So when it started moving up, and you can find my tweets on this, I said I want to look to short this point. I'd said down here somewhere, if price gets back to 79K, I'm going to look for shorts to short it back down to 52K. So it was either this level or this level. This is the continuation level. That's the decision point, which is usually the best level. And then I'd said, if I see a reversal pattern at this point or this point, I'm just going to take it. I have to take it. So the reversal pattern I look for is essentially what I've just been saying. You get the push up, you get the range, and then you get a breakdown of the lows of that range. And I can take that first sign as a signal of intent, like it wants to break out. It's now formed a supply zone. And then once it's retested it and then created another low, then I'm chasing it and wanting to get in. Sometimes it will go like that. Sometimes it will come back up, then go. Sometimes it will come up, fake it, and then go. Multiple different scenarios, but essentially that's my entry trigger to get in then. So I want to see that at this point, and then we got this range here. So it came straight into the extreme of this level, hits the lows, hits the high, drops below the lows, retests, and then drops. Then I took a trade at this point here, or not that one, but that big candle, because I was expecting it to drop because it's hit supply, it's put in equal highs, and then it's nuked through the range low. That was a trigger that I had to take. Ended up losing that trade. And again, I had managed to trail my stop when I saw that yeah, once it wasn't going, I put it above that high. So for like 0.5 R loss or something like that. But then this is all like, right, information that is telling me it looks like a top, smells like a top, but it's just not quite there yet. So I knew it was probably, if on a break of it, which we get the range here, break out, comes back down. Let me just zoom in on this. Pushes up, ranges, breaks out, retests, and then pushes back to create a high. So I know that's going to be coming deep for the liquidity up there. It's going to come and test the extreme of that most likely. But I know anywhere between this level and this level, I can look for that reversal pattern. Ideally, I'd have it at the level because it gives more confluence to the decision making. But anywhere between these two key levels is fine. And then got the range here where it pushes up, comes down after testing the highs, pushes up multiple times. There's a low, but it's not yet the low. Comes back to the mid-range and then puts in a lower low, like with massive strength. And that was my first entry. And then once it came back up and spiked the high and then closed mid-range, I took another entry there. Because then I was like, right, this is, everything's put together. We've had the momentum, we've had the signal, and we've had 3 lower highs as fake outs. One more fake out is probably in line, and then Bob's your uncle, it puts in this next big candle to the downside and then has trended south. So these little scratches are giving you a feel for things. It's kind of like you're able to get in and you're able to understand the flow of the game a little better. It's like if you jump into a COD match, right? And sometimes you're a little bit fresh and your shooting's a little bit off or your reaction time's a little bit low. So you're seeing like signs, but you're not quite there yet. Oh, the smiley face. But once you're in the flow of things and you start seeing the exact signs, that's when you get a little bit more confidence because you've been burned on what you thought were maybe, they're not A+, they might be B grade or A grade, but sometimes those are the patterns that go, and you've got to take a chance, especially when you're at a key level, which I've been talking about for months. So you kind of have a go, but it's wise to put in a little bit lower risk just in case in those situations, and then look to add once the next key level has broken. So if it had gone here and I was on lower risk, takes this level out, I'm then just going to look for a continuation at this point because the market's telling me this is a top, it's broken key support, and on a retest of it and another break below, it's worth taking that short. So it gives you kind of a nice little feel for things. And then when it really like starts ramping up, it just feels, the air feels a little bit different. And you're looking at the charts and things are moving a little bit more like what you didn't expect for so long. So for example, in this uptrend, I'm looking for the signs of lower lows. And the first lower low wasn't the one, but the second lower low situation. So if you've got this here is a lower low, and you don't see that in other ranges on the way up, right? So you got the low respected, and then it gets broken, and then you get the next lower low up here, because then you get another range that gets respected, and then you get multiple lower lows. So these are kind of like that feel for the market, just to kind of test the waters a little bit. And when you're looking for that opportunity, particularly when it's on this time frame where it's going up for ages, and you're like, is this it? Is this it? Is this it? Is this it? It becomes then very obvious when your actual trigger is. But these little ones can prevent you from taking the big loss. So I sized up much bigger at this point than I had at this point. And even now, if I move my stop to above this high, this high, if I move my stop there, then it erases all the losses and I've still got profit to spare, because I was able to size up compared to taking smaller hits, not only with smaller risk, but like taking 0.5 R taking minus 0.5 Rs, minus 0.2 Rs, and that's really the key. So when, like, for example, this is the short here, and it creates that next lower low, you could just move to break even because you expect this now to just drop. When it doesn't, and it starts farting around, and then it looks like it's going to go, I can move my stop here because it should be going, because it should be protected. But then if it comes and gets taken, it's likely it's going to move up to the next area of liquidity, right? So it's about being active, and it's about having a feel for things, but also being fluid with when information changes, and it's much easier to do that on a higher time frame. So yeah, that's kind of that. But I've talked about it on other videos. The deepest retrace levels are these sort of key areas here. And if you're patient enough to wait for the deep areas, then you're going to get the best trades. And I'm hopeful that that's now what we're going to see here. So we'll see what happens. Right, let's now go on to the next section. I thought of this section earlier when I was in a different mood. And I don't know if I've got as much to say. Maybe I do. We'll see. I'm going to have some water. I've been thinking about it since I saw Gainsey had made a post about how things used to be different on CT, and how now everyone's just doing the wildest shit to get engagement. And it's true. And anyone who's watching this or listening to this and is trying to grow their own social media account on here, you'll know that it's quite a frustrating thing to do. And you try to put out what used to be the way to grow, was to put good content out there, educational content, good trade calls, that kind of stuff. It's no way near as easy to grow an account if you're just like bull-tarded. Like if all of this way up, for example, on Bitcoin, I was talking about, like, I'd seen people, like I track these things. I look at people's accounts, and when people are super bullish, I watch their engagement numbers and I watch their followers move up, even though I'm looking at this going, this is all going to come straight back down. This is not a bottom. Like, there were people longing up here, getting like hyper bullish, and those people were getting more engagement. Those people were getting more followers, and I'm looking at it going, this is a top. So it's whereas back in the day, and I don't want this to all sound like, oh yeah, it's not fair or anything, because I still think Twitter is good. I think a lot of people moan about it, but I think a lot of the people that moan about it, particularly big accounts, are people that had kind of got their large following from gaming a system rather than genuinely adding value, and they're watching their engagement drop. I think something has happened on purpose, and I think it's quite a good thing, because yeah, like the very sad state of affairs on CT these days, it has always been a certain way anyway. It's not like when people say how good it was back in like 2017, 2018, it was, but it still had a lot of shit going on there, right? Like now you'll have more people on here getting paid for affiliate links and like other paid services, and then saying that they got all their riches from their trading. And if you've got like a decent side of income coming in from social media, and it's very, very possible to, like staggeringly possible, you are able to size up your trades, and if you have a good trade that makes a decent amount of money, you're able to live off of that for a while, both financially and with your brand or whatever. You're able to dine off of that one trade in multiple different ways. But you could do your ass the next month but not tell anyone, and you still look like a hero to everyone, right? And I think that it has therefore become a place where people are chasing that more than like actual good trading, because if you just keep ball posting, then people forget, especially when it's like the money's going back up. And I think honestly, if you if you're there to get onto social media and go down the route where you want to talk about trading and you want to get paid to talk about trading and sharing your experience, I think absolutely you should do. I think absolutely you should be, in this day and age, in this world that we're in now, you should absolutely be on social media trying to make money from it and using your experience. And it may not necessarily be the thing that attracts hundreds of thousands of followers in your first couple of years or whatever. There is, the reason that people get those types of followers. Mostly, obviously, there's exceptions to the rule, but I'm thinking of like this new influx of people on CT after the 2021 high, or that cycle. A lot of new people came into the space and kind of took over. And one of the ways that they took over was just being like ridiculously bull-tarded. But if you're going down the route where you're just going to share your experience, and I talked about Popeye with this, the authentic route is it's more realistic. It's what people resonate more with, because it's a true experience and they can see themselves in you, and they want to see how you improve your situation so they can improve their situation. Whereas I think one of the big ideas with social media is that you need to show everyone that you're a super profitable trader consistently every single day, every single week, and it's just not the case. If your goal is to make money from social media, then you can make a very decent income in this field, simply because there's just so much money around for it, and just simply because there's so many people these days interested in it. And it doesn't therefore need as much as you think, but you have to really consider how manageable it is to have a social media which is just consistently like putting out lies and consistently LARPing. And I'm not calling anyone out, because there's no one to call out. There's so many people that do it, but it's a thing that has taken over the space more than it had in previous years or previous cycles. And it has therefore become a place where, instead of a lot of value being shared, it's the same template sort of, this is how you go and get loads of followers. This is how you go and get a load of deals. And it doesn't matter how I trade, because the people that, particularly if you've got an anonymous account, the people that see your losses will forget about the losses when you start pumping up big wins on longs again when the market's going up. It's just what kind of way it goes. So it's not like a dig on how CT is these days, but Gainsey had me thinking about it, and I kind of look at it through that lens as well, where for me it's kind of weird, because I'd gone for like 4 years and came back, and it was like, oh, everything's like, everyone in the room is completely different. There's so many more people here, and yeah, I don't know really. I think in this day and age you have to be doing what you can to make money online. Just be honest about it. Just be honest about the way that you're doing it, and you'd be surprised that your honest content and your raw content, you'll be surprised at what it can do for you, especially if you're like making it interesting as well, right? You've got to make it interesting. You can't just be like putting a bit of text up saying something and expecting people to engage with it. You need to put it away and that's kind of interesting. But I think that has been lost for a lot of people, the idea of wanting to do that, because it takes longer to get to where you'd want to be. because you have to be more honest. You have to, trade realistically with trading. Like, this has been a very hard period to build in because there's been no direction on the market, and trying to get engagement in these situations is very difficult. But endless bull posting and incorrectly reading the market, for example, not saying anyone has, but if you did, it doesn't matter, because you'll 10x, you'll have 10x more followers bull tarding here than you'll have bear tarding down here. But it's just like, if you're constantly posting doom here, you'll get 10x less followers than you would if you're constantly posting bull propaganda here. And therefore, like, when it next goes up and you're next right, you've got way more people who forget the losses on the downside. And that's kind of how a lot of people grow, is just to be constantly bull posting. And the negative side of that is that people who are genuinely interested in trading get their perception of what's going on pretty incorrect, and it becomes very painful then. But in this day and age on CT, people don't really care about, the little guy, and you see rug pulls all over the place. And apparently that's okay if you've called out scammers in the space. It's okay for you to then rug pull people. But again, it's just like a weird place now, like, where it's everyone out to get one over each other. Whereas trading is such a lonely place. It's such a difficult place. It puts you into very negative mindsets. It can, like, darken your entire existence in this world, because it causes so much frustration. And everyone who is trading is going through the same things. They have the same hopes and dreams and expectations and desires and work ethics, and just constantly pushed down by the market. And we're now in a space where there are fewer people trying to bring each other up. There are more people that just kind of want to take advantage. And it's kind of sad, but it's to be expected. It's just human nature, isn't it? But now that CT's got bigger, it's just, you see that on a much bigger scale. Of course, you still had that before, which is why I mean, like, it was good back then. But also, there was still a lot of shit. I remember Eric Cho, like, saying he was in hospital, and he couldn't do some stuff for his group, his paid group, who he'd made like millions off of. And then the same night, one of his mates posted him, he said he'd broken his arm or something. Then the same night, someone posted a video of him like dancing in a club. So we had a lot of shit still back then, and that was obviously frowned upon, but it was funny, as Sunny Orbit says there. It wasn't good, but it was funny. Whereas now it's just kind of, I feel like a lot of market participants have just been absolutely drained, like their soul has been drained out of this cycle compared to other cycles in a much more, a darker way, or just like a really energy sapping way. I feel like a lot of people are really fatigued compared to other cycles in a completely different way. Yeah, and it just makes it a bit of a darker place. I guess this is why Nikita Beer has like showed that the crypto space is one of the, like, was it one of the biggest, most searched or most muted or something? You can kind of understand it as well, right? So yeah, like I said, it's not really a positive or negative on CD. It's just, it is what it is. It's bigger, way bigger than it used to be, and all of the problems are exacerbated by 10. So much so that the president of the free world is committing crimes on there, or allegedly committing crimes, I should say. But is what it is. You just got to carve out your own little, like, you got to create your own little space in it and put out good stuff. So I hope that someone who's listening to this wants to put out good stuff, the honest stuff. And again, you'll be surprised at what it can do for you. And you don't have to play a character, and yeah, it just becomes easier to put content out. So yeah, last, I haven't actually started work on it. Last section is, I'll talk about it rather than putting anything up, because I haven't got anything to put up yet. But I've documented, like, in the past couple of months, well, maybe a month or so, that day trading doesn't really seem to be for me. And putting my hands up more into swing trading, and I find it boring. I find it difficult to wait, even though I find the trading way more manageable, the emotional control way more manageable. It stretches things out and makes it like a longer frustration, because you're expecting things to go, and when they retrace, you know, you might have a retrace that lasts like 4 or 5 days in this instance, or overall ends up being like 2 weeks of sideways. And in that period of time, I'm not opening more trades if my margins be like extended too far, for example, which happens because I take multiple positions on a higher time frame. So there's frustrations in that part, even though the results are good. It's nice to have it alongside a day trading setup for my life. I can't just do solely this. So I'm going to be adding 6 to 8 charts on a 15-minute time frame, and that is to day trade more and look for enough opportunities across different markets as well. So I'm going to have BTC, I'm going to have Solana, I'm going to have Hyperliquid, I'm going to have Cable, I'm going to have the NASDAQ, and I'm not sure what else from there just yet, but those are the ones I've got so far. But I kind of want more exposure to different markets, so maybe I'll add gold in there. But I've never really done too well with gold in the past, so maybe I was on too low of a time frame. But maybe that goes in there as well. Maybe oil. But if you've got any suggestions, basically I'm looking for something where I can look at it from 7 a.m. to 2 p.m. UK time to get an opportunity, knowing that it kind of comes sort of, I get most of my opportunities sort of pre-New York, end of London. So yeah, if you've got any suggestions on stuff that moves in that time period, let me know, please. Signs of trend exhaustion and hype. How long can it decouple from BTC and ETH? It's a very interesting question. How long it can decouple. It's quite a surprising thing, isn't it? What is the best one to look at? What was the best exchange? Bitstamp? So the thing with Hyperliquid now is that it's in price discovery. So you have to look at trading price discovery in a completely different way. It might be this one here. That's better. Oh yeah, that's where my thing is. So it's gone into price discovery, right? And it would be foolish, in my opinion, to start looking for signs of exhaustion to short when you're in price discovery. Not only is it foolish, I just don't think you should do that. So you have to basically wait for price to go sideways and define the price action itself and the market structure itself, and in order to then take trades. You're probably going to take fewer trades, but you want to do it in a way where you're not FOMOing into the trend, and you've given it time to retrace, especially. So when you've got price action to the left, like you've got here, you can use that barrier as something to define your market structure. So in this case, in the simplest of terms, it moves up and creates this range here, like so. I know on a breakout of this range high, price is likely to continue, or on a retest of the range low, considering we're putting in new highs, we should put a higher low in, and then I can get long. So you get price ranges, deviates to the downside, fakes out to it, fakes out the upside, comes to the mid-range, fakes the high again, mid-range, fakes the high again, and then drops down to support. So you're looking at the fact now that price is in an uptrend and it's coming into the range low. So you could long here, saying it shouldn't create a lower low, and put your stop below that lower low. Because then if it does, then you know you're starting to think that there's a top in, and that's really where you should then start looking for shorts once the market structure is broken, rather than trying to time something, right? So you could go long there, or you could long the breakout of the upside after it puts in this higher low and then makes a higher high, and then you can trade with it. So if you're now looking at this with your dick in your hands like I am, with no position in Hyperliquid, and you wanted to get involved because you have FOMO or because you genuinely see this going a lot higher, I would look to where, again, there are higher highs and using them to define your market structure. So we have a higher high here, and then we get a nice retrace to put in that higher low down here. So right, we've had a sell-off here, we've had a downtrend form from it, but it hasn't broken any key support levels. This is all just contained within that swing up. So on a break of that, you could consider maybe that first low like that is your range low before it gets tested to the upside. So you wait for the confirmation above the level, and then you can just start looking for higher lows, for example, to go long with. But now, again, you've got nothing here other than this high, and then you get the retrace, and then you can say you've got a range. So you look for these ranges then, and then look for the behaviors and the breakouts of them. And then if it does something like this, where it deviates below it into prior support, this channel here, and then you can look to go long again. Or simply, you look for where that higher high is. This is very different to this because price is compressed into a channel, then impulsed up. This has just been a push up and created a higher high. So I'd look at this all as one structure, and I'd look at this as two different structures. So I would then look to the other extreme of it down here like that. And then that's where you look to trade on retests, because then that becomes an area where, again, you've got a higher high and then another higher high and a higher low. So you would say this is a resistance that failed to hold us down, and it created a support level on the break of it, so it should be continuing from there. If it doesn't and it breaks it, then you've got a change in market structure. That's when you should be looking for signs of exhaustion. But otherwise, if this just, now you've got that previous higher high out of that channel, you've now got a range that is forming. And the way I look at ranges is you've got a trend up, you have that first retrace or the deepest low it goes before testing that trend high, and then you can use that low in the original trend high, and then you get your range. So I'd be looking for that here, for example. But if it starts breaking out to the downside, I'm not looking at that as a sign of a top until it breaks market structure down here and then starts trending south. The better way to play it, if you want to take risks that you are taking longs at highs, is waiting for a range to form and then just looking for the breakout. It could just retrace like that and then come up like that, in which case it's a better long, because you've got the fake out of the downside and the reload into support, and then you've got the high where you can look for the breakout over here from with a tighter stop loss, but you have more price action. So you need more patience and you need more price action, and understand that you're taking fewer trades. But when things are trending, that's when you can up the risk a little bit, because it should go, and it should go quite easily. So yeah, that's how to make a lot of money on trends, is to take fewer trades but take bigger ones. All right, guys, I'm going to leave it there. Thank you so much for joining. I need to get this chat thing sorted. I don't know why it's not working. If you've got any recommendations for charts to look at during the London session and pre-New York, let me know on the M15 timeframe. I've got Castillo Trading is joining the stream on Wednesday, and so that'll be a good one. And yeah, happy trading for the rest of the week. Hopefully you're all in shorts and creaming off of that, or in longs on Hyperliquid and creaming off of that. Take care.